Wednesday, April 2nd, market analysis, Stan Ehrlich. Good morning. I'll mention that if you want to reach me, you can always find me at info@ersignals.com. Right here, info@ersignals.com. I start out with stock market indexes, go to futures, and sometimes some other topics, cycles, chart formations, a variety of things. I've got a couple stocks that I'm monitoring recently at the end of the futures section. Let's start out. Now, we had a double top. Let's move this over so we can see current data. We had a double or triple top. We reached very close, or in a few cases, the downside objectives just this Monday. In some cases, most of them, we got extremely close to oversold, not quite. Reason to look for a bounce, but not oversold, so borderline. But in the case of the E-mini, we got into a support area and we are bouncing. So a little bit of a reversal on Monday with a lower low for the move down completely for several months with a higher close, and then a little bit followed through yesterday, and today we're coming up after the markets were opened a lot lower and then completely recovered within minutes, about a half an hour, jumping back to very slightly lower and then rallying up to higher on the day like we are now. I don't trust this rally still. Looks pretty interesting, but I haven't got any reversals. I haven't got all of the tools that I like to be convinced that we're now going to attack the highs that were made basically on March 25, 26. And I don't think that's going to happen. Maybe we'll get close, but that's in a resistance area, and I don't trust this possible double bottom in a support area. True, with the first low, which was on March 13th, oversold. This is a new low in price, but not a new low in the indicator, so you could say divergence, correct? So there are some reasons to think that maybe it's a bottom of significance, but I don't think so yet. Any close above that March 25, 26 highs would start to convince me that, yeah, I missed the double bottom at the time that it started. And then we would have an upside objective well into the resistance area, which again was the trading range, basically November, December, January, February, 4 months. So are we really going to rally a lot or not? I don't think so. I'm looking for a test of the resistance area. 57.90, call it 58 flat, maybe a little bit higher. And we're already getting relatively close. This is the 5-minute chart I've got for you today instead of the 1-minute charts, because you get a 5 times more data, a little bit bigger picture last 3 weeks, but still a lot of detail. So we're rushing up, very overbought on a 5-minute basis, into a resistance level where it's had troubles before. The SPY back up to a little resistance level. I think it could rally a little bit more, but again, I don't trust the rally in the indexes. We made a new low. It's a divergence. We never got to a support area. We didn't get, like the E-mini, to its minimum downside objective, although we came pretty close, and that could have been good enough, but I can't tell. Next is the 5-minute chart on the spider. Again, this rally in the last couple of days is really not that big a deal so far. I need to get above that 576 and a third on a closing basis in order to justify a chunk more of a rally. And we've got the QQQ. It did get to my minimum downside objective. Unfortunately, it didn't quite get to oversold. It came so close. So here we are bouncing back up into a resistance area. Again, I think the rally is going to peter out and not make it above the highs that we saw specifically on March 25 for the QQQ, and develop maybe some other kind of a bottom. I think it's going to make new lows again. QQQ 5-minute, Not much to say here. And the NASDAQ did make it to my minimum downside objective. It's, it's the little brother of the QQQ anyway. And the same kind of commentary here. And the 5-minute chart. Yeah, I just don't see it. So YM did not make a lower low than the previous low, which was on March 13th, and is getting a little bit closer, a little bit quicker to the important recent rally high on March 26th. But it is at a resistance area already. It never came anywhere close to my minimum downside objective. So this has held up better, not to imply that it's going to be a bigger, stronger, faster bull market move, but I will reserve comment later about that. I'm still looking for it to stall out and head back down. And this is the 5-minute data. Okay, the Russell made a new low, got into a support area. There was no particular downside objective. There was no particular double top formation. There was no particular measurement to the downside like on the other indexes I just covered. And a couple of those had worked, and a couple of those came very close. Not the YM. But the Russell is a market by itself. It doesn't act a little bit like the YM, like the S&P or the NASDAQ. So rally up to resistance, okay, fine, no problem with that. But I think we're still getting stuck between a rock and a hard spot. So the rally to the red resistance area, backing down again, wouldn't surprise me in another couple of few weeks, back down to 2005-6 again. Next, we got the 5-minute chart on the Russell. Well, let's go to bonds. Bonds touched my neckline that I've been talking about for weeks. That's a critical level. You need to close above it to have a breakout. You're not supposed to touch it and then back off right away. And the 10-year notes are even a little bit worse. You'll see in a moment. We came very close to overbought, but not quite on the bonds. It is a bearish engulfing, an outside down day. Right now, we're holding around yesterday's low, just a little bit below her. And that creates the outside trading range because earlier we were higher touching the neckline. So is this completely failing here? This could be the beginning of that. This head and shoulder bottom may not work because this bearish engulfing says we're supposed to go back down, and this is exactly where I would have expected it to get above the neckline, shoot up on high volume, large rally, continue for another day or two maybe, strength, then have a correction back down to the neckline, but that's exactly what's not happening. So if we get back down to 1508, 11508, which I don't expect at the moment, but this is how it could start, and get down even lower in the next several days, a week or two, it's going to kill the head and shoulder bottom. 10-year notes. Bearish engulfing ER red sell signal today because the rally high generated a RSI level above 75, not the bonds, but 10-year notes just barely did it. Also touching the neckline or just a hair below it. This is the exact spot where you did not want to find a bearish engulfing sell signal. You were hoping, because of the larger pattern starting in November, which is still there. It's not broken yet, but you didn't want to find this. This is the kind of thing that could kill the whole damn bullish pattern. Period. So I'm not happy with this. I may have to end up flip-flopping my opinion starting today. I'm just not sure, but I certainly did not expect a bearish engulfing. Now, if it closes higher on the day for some reason in the 10-year notes, it'll have an outside up day, and it'll be exactly the opposite, except I won't have any green. The red will disappear, bullish engulfing. I'm okay with that. And then probably tomorrow, it'll break out to the upside. But that's not happening. You got a bearish one here. Not good. watch out. If you're long, I'll be raising my protective sell stops. If you want to go short, I'd certainly consider it. This is where the risks are relatively low and the rewards are higher. If you procrastinate and wait longer to go short, your risks may be a little higher and your profit potential probably will be a little bit less. Okay, what about crude? Got overbought the last 3 days. Last 3 days highs are almost exactly the same. We are up a little bit at the moment, but it's having a little trouble here at around, a little under 7,200. It could be topping out. I'll stay with that comment, although I'd be a lot more pleased if it was already trading around unchanged or a little bit lower on the day. But it is up 0.53 at the moment, so we need to see it flip-flop back down again if I'm going to be right. Otherwise, we'll have new highs. It'll pop up a little bit more, get more overbought, and still provide a new short sale opportunity very soon, probably. Could be happening now, just can't tell very easily. We're overbought for the first day on heating oil. Good. So this is now setting itself up for a downside minor correction. The bottom formation is still very, very, very much intact, and it's a large head and shoulder bottom if it works correctly. I'm going to go back to the crude oil. All we have here is a support area and a long-term bull trend line, not the same bullish pattern. Okay, so back to heat. We'll see how this minor downside correction I'm looking for soon, and maybe from a little bit higher price levels, is handled by the market. And if it can hold and turn back up and keep going up, great for the head and shoulder bottom. And what about natural gas? Almost exactly the opposite situation. We had a head and shoulder top. It did break out to the downside on March 21. It did have some, excuse me, downside follow through, although slowly, not particularly typical. It did just on Monday come back up to the neckline, pop up above it a little bit, but the closing was well below the neckline, and that's okay. Drop off very sharply yesterday and bouncing back a little today. So what we don't want is it to close above the neckline, which is climbing every day a little bit. What we don't want is it for to close above Monday's high, which would be essentially the same thing about the neckline. And what we don't want is it for it to go sideways any length of time. We want to see it get below yesterday's low, which is about the same as today's low, on a closing basis, and then make new lows to the trend down. If it all works okay, the minimum downside objective is a hair below 3.000. But I just don't like this little bounce today, but it doesn't do any major damage. What do we got? Overbought conditions on the gold market. Now for another day, but no new high. It's a doji, but it's up there close. Wouldn't be surprised if it did make it. But what I'm really doing is waiting for sell signals. The minimum upside objective has now been fulfilled off of that pennant formation that I talked to you guys about at the time that it was forming, at the day that it broke out, made the measurements to the upside, and now it's all ancient history. So what's new? Well, overbought, objectives have been met. Now I'd love to see a bearish engulfing ER sell signal that would turn the price action red. Not yet so far. So let's just wait and watch for a sell signal and then maybe get short. The head and shoulder top formation building in silver is still doing a fine job. My expectation about rally highs was very close to being super accurate. The timing for the last rally high, no matter what price, is very close to being exactly to the day I expected. It looks like it's a day or two earlier. So I have my predictions essentially price-wise good, time-wise good, pretty accurate so far. Today we have a doji. We're rallying up a little bit. I need to close below 34.13 ASAP. And that would be a lot more convincing that my last shoulder was pretty much a bullseye or very close. And we're not getting it quite yet. So let's see if silver can start to get softer, period. And that's head and shoulder top out. Remember, it's a very, very big long-term bearish formation. It produces a minimum downside objective in the ballpark of 23 and a half. Big move down. But it has to have this last shoulder and it has to work correctly. And all that time period between now and whenever it gets down there has to act as head and shoulders should be acting. Platinum, rock in a hard spot. Can't seem to hold rallies. Can't seem to stay down when it drops to support. Not too much of a comment at the moment. Could wobble back and forth in this trading range around or below 1060 and at or above 950. Next, copper came up almost exactly to previous highs quite a while back, May 20th of 24, 11 months ago, about. Got very overbought, turned around and slam dunked. I do think it's going to come down more. 4.89 would be just fine, and even lower. We've had a little bit of a doji yesterday, and so far today, another one. Prices aren't really going up or down much one way or the other at the moment. So let's see it break out to the downside again and get down to some support and see how it handles that. The first downside objective again is 4.89. What about soybeans and the grains, oil, meal, corn, wheat, and then cattle, hogs, and then a couple stocks? Beans did a great job yesterday of having an outside up day, a new high, and a new high close to the rally. Good. Normally, just fine. Bullish. Momentarily, we are down a little bit, 6 cents. It doesn't matter if it dribbles off slightly, as long as it doesn't start to get below yesterday's low. Sorry about the cough. So as long as we are holding above yesterday's low, hopefully the bullish engulfing is going to have its bullish effects, and we're going to start to see highs higher than yesterday's high. So this little dip is no big deal. Let's see if it can continue to work its way up. If it does, we could have a very big, broad bottom formation, which I'll draw in the details about the formation in the few days to come. I just want a little bit more strength, a little bit more proof that it's starting to work its way up. But I will say that, approximately August 20th is a big shoulder low. It's a little sort of double bottom by itself with a bullish engulfing buy signal, ER. The bottom is oversold, not a heck of a lot lower, but it's the lowest low. And it is around the middle of the time frame to the beginning of this rally, which was only a week or so ago. So the timing is right. The price levels are about right. The neckline is almost exactly flat, almost. It should be downward slanted just a tiny little bit. Everything looks fine for the bullish engulfing. I meant bullish head and shoulder bottom. There's also a similar pattern brewing in soybean oil, which is doing a much, much better job here. We do have an attempt to make a new high for months. Today, if it can just get up a little bit higher than today's high, this will be a new high since November. That's December, January, February, March. So that's a third of a year. Didn't make it. The high we had on a little spike high, February 19th, stopped the rally, but we're still up strongly near the high of the day. It looks like it could push through and get to the top of this little resistance area at 49.13-ish. And then we're going to be coming very close to the neckline at 50.50. Closing above 50.50 is going to generate a minimum upside objective of all the way up to 61.87. Again, if it works correctly, not all these patterns work exactly the way they're supposed to. So you have to know what they're supposed to do, when they're supposed to do it, and to some degree, how they're supposed to do it. And I've seen so many of these over the 53 years that I've been a technical analyst or chartist or drawing charts by hand for over a decade at first. And then with Computrack, the original technical analysis software written for the home computer, which was an Apple IIe or an Apple II Plus in 1977. So I've been using technical analysis software since 77. So I'm liking what I'm seeing. It's just overbought. It deserves a little downside correction before it shoves north and breaks out, although it still could do that directly. There's nothing wrong with that. It would just get even more overbought. But the odds are pretty good that it's going to flip back a little bit real soon, time and price wise. What about meal? Bad boy. We are at the low of the day, and we are breaking the new low ground ever since, oh my God, years. Ever since the lows we saw in November of 22. That's all of 23, all of 24, and a good chunk of this year. 2.5, 2.33 years, new lows. But other markets have done this. Just a second here. I'm trying to make some changes. And turned around and survived because we are oversold. So all of a sudden, if this thing starts to rush back up and close, oh, I don't know, yeah, above Monday's high, then the story changes. But I'm not going to talk about it until it starts to develop. Otherwise, I'm sorry to say, bearish. But again, oversold means small bounce. Corn, doji, slightly higher on the day momentarily. Don't see anything wrong with it. Looks like it's a little bit lower actually on the day. We need to wait until a new tick occurs before this net change number of +3 goes to a negative, I don't know, a few pennies. There we go, -4. So no change of opinion. Double bottom, maybe. We just got a buy signal last Friday. It's been working great. Monday up, Tuesday up. Today so far, doji and a tiny bit lower. I like what I see. We just got to have the upside follow through. What about meal? Wheat, man, I meant wheat. Like meal. Recently saw new lows for a long, long time, years. But it was oversold and jumped back up again. So it's regaining a bit of a life, so to speak. And I do see some potential long-term bullish, but you have got to get back up above 575.25 on a closing basis in order to bring this really back to life on a longer term basis. Short term, oversold, rally back up to a little resistance. Maybe it'll stop at 552 or maybe 559 and then turn back down. I can't tell because the trend has been down. No rallies that had their major upside follow throughs, and we've seen lower lows periodically. I got to go with a small rally and maybe new lows. Now, we had a great sell signal that worked for a couple of days very nicely in cattle, and that was on March 21. We had a rally that got overbought a few days ago and started to turn down on Monday, but today's high is actually a very small new high for the whole trend. And that kills the bearish signal that we had on March 21, although it did produce a scalping trade that made some money and an overnight trade for a couple of days that made some money. So it's not like it didn't work. On a longer term basis, it's not working. But on a shorter term basis, past tense, it did work. So I'm looking for a double top here. Maybe. Are we overbought again? Very close. Do we have potential divergences? Maybe. See what happens here. Hogs. Well, I've been between a rock and a hard spot and not knowing what to say about hogs for a little while, and I still don't know what to say. So I'm going to leave Miss Piggy alone and let her start to tell me what to do soon. Couple of stocks. Shell. Minor new low. Tried to start to close that gap from several days ago, from the high of March 24 to the low of March 25. Today's low is right around the low of March 25. Almost starting to close the gap, and I'll just pull this over a little bit to the right. So I'm looking for the gap to get closed, minimum. I'm looking for it to test the support area next at 70.88, 85, 70.85. Then I'm looking for another gap to get closed at 68.80. That's my downside objective, 68.50, 68.80. Period. Next, Apple. High and last at the moment, trying to make a new high for a couple, 3 weeks. A lot of technical resistance above the market. Really don't have a very strong opinion here. We did have a bullish engulfing buy signal. For some reason, my strategy turned off on the March 21st date. See the bullish engulfing, and it was overbought. And I do have a green RSI, which is working perfectly on my indicator sub panel. So, what are we doing with the E-mini at the moment? Very bought 5-minute data, overbought, started to pull back down very slightly. Remember, I generally don't trust these rallies in the interest rate, stock indexes yet. So that could have been the start of something. I'm not sure. Looks quite possible. You guys have a great day and profitable trading to you.